So typically people would look at venture capital investment after they've achieved some sort of prior capital round, typically with an angel capital round. So we look at later stage businesses, typically businesses that have product already developed. You'll have some customers that have come on board and you're starting to make some early revenue. In some cases, especially when it's a high-tech company and you might be developing some deep IP businesses, then we may look at you a little bit earlier. But that's typically what we look to at early stage companies. So for us, why would a venture capital firm invest in a company? We look at probably three main things, and I'd call it compelling team, compelling product market fit, and a compelling investment. And if we break those down, we would sort of say a compelling team for us is a team with founders who have deep knowledge in their space that they've provided a solution for. They've got a really open and strong communication style. They're able to present complex ideas in very simple fashions. And also that they're able to negotiate and understand commerce really well. And generally, people that we can build trust with and know that when we make a large investment, that they're people that will feel confident that we can build alignment and move forward with. In terms of the product market fit, what we like to see is a solution which solves, we call it a genuine need. We separate it and look at it as some companies produce a product which is a nice to have, and we like to invest in need to have. So it's up to a lot of the companies to define what that need to have is, but that's all part of that compellingness, and we take a very strong view as whether that can be solved and needs to be solved, or whether the company, your customer, may in fact have a number of alternatives, of which you may be one of those. We actually look at products that are unique. They have some innovation. We use the term innovation moat, which means essentially that it's not easy to replicate or copy. In today's world, there are thousands of companies all producing lots of solutions, and with large pools of capital, it's often very easy to replicate. So we like to see a little bit of secret sauce in what your product does, and so that anybody who can just go onto your screens or your website or your solution and say, hey, I can do that. That becomes a little bit difficult for us. What we also like to see in product market fit, like I say, we're a later stage investor, is companies that understand who their customer is and how they can sell to them. Typically these days, especially with the internet, it's easy to put up some Google ads and just say we get a number of customers come on board from our Google ads. But that doesn't quite get it from our point of view. It gets you some initial traction. What we're really keen is to understand, why do those customers come to you? What is it about your product specifically that helps their business go forward and creates value for them? The last thing that we're interested in is typically, is it a good investment? What is a compelling investment? And key to that really is what we call the total addressable market, which is TAM. So the total addressable market is really about where your product can be sold. And for us, generally we're saying that's a global market rather than specifically just New Zealand. And the opportunity is, if not in the billions of dollars, then at least in the hundreds of millions of dollars that your product can sell into.